Welcome to another episode of Making Sense of Wealth. I'm your host, Andrew Whalen. Before we get into today's podcast, I wanted to give a brief market update, talk a little bit about COVID. It looks like some of the states are starting to see a little bit of a spike in the infection rate, as well as hospitalizations, such as in states as Arizona, Florida, and Texas. And we even saw announcements today from specific companies taking additional precautions, such as here in Las Vegas, the governor of the state mandated masks being worn. So it's going to be interesting to see how that's going to affect the market over the next few weeks, as we've seen the market kind of fizzle out from that March 23rd low. But that is not the subject of today's podcast. Today, we wanted to talk about the coronavirus, real estate, and you. So the majority of our clients and the large majority of individuals either own a home or are looking for a home. So today I am joined by Lena Paola. Is that correct?
Lena Paola.
Lena. Oh man, I'm so sorry.
Okay, no problem.
I was so nervous. Nervous.
No worries.
Lena, I apologize, Lena. Can you tell me a little bit about yourself, where the agency that you work with, and just a little bit about your history?
Yes, so I am a local. I've lived here over 20 years. I've been in real estate for 15.
Awesome.
Went to UNLV.
Local.
And yes, and I've worked through all the markets. So I've worked through the past recession, and now I'm working through Corona. So,
Corona.
Yeah.
Everyone's a little bit unique, right?
Yes.
And what's interesting is, a lot of people that are born and raised in Vegas were called unicorns, and for I think a number of reasons, just because of how unique we are and how often you don't see us around. But that's great. So 15 years of experience, and you lived through '08, and there's a lot of parallels between '08 and today, at least maybe as the initial shock. But I think there's a lot of big differences.
Major differences.
And we'll get into those. So right now we are in a recession. So a recession is defined as negative GDP growth. It may not always feel like it when we go out, but we're technically in a recession. So just from a 30,000-foot overview, I know that retail sales were, up 17%. I know home builder sentiment came out just the other day, and that was an increase from April, but still relatively negative. And then I did just read that sales across the U.S., and I know we're going to be talking specifically Vegas, were down about 9% in May and 27% year over year. And that's the biggest decline since 1982 when interest rates were, 18 or 19% on a mortgage. I mean, we complain, trying to refinance from a 4 to a 3. I can't even imagine if it was 18%. But how does a recession, generally affect, because of your experience in '08 and even now, how does it affect the real estate market just in general?
So different effects. So currently, the biggest effect we have is the unemployment. If you don't have a job, unfortunately, you're unable to gain a loan. So without a loan, you can't gain a home. And that's where it's greatly affecting.
Without a loan, you can't gain a home. I like that.
I mean, that's really where it's greatly affecting us. Most people know it's temporary unemployment, so it's not going to be a long-term effect.
Sure.
I mean, I personally have been busier now than I was at the beginning of the year.
Wow.
Yeah, people have what they feel is more disposable income.
Sure. And we talked about that, right? Because they're not going to concerts, not going on vacation.
So that GDP is going now towards things that they probably should have been spending it towards before.
Yeah.
Which is home purchase. So there are plenty of people that do still have homes, that do still have the proof of income. So me personally and our home sale numbers have not locally seen a decline.
Yeah, that's interesting.
Yeah, so we are doing still pretty well, although we had some fallouts. Like you said, in April, there are a few homes that couldn't get financed because of people not being able to say that
the income.
Yes.
That's interesting. And I never even thought about it from that standpoint where you have to show proof of income. And even if you have the assets, you're not always guaranteed to be able to get a loan if you can't show that stream of income. And even if you're temporary furloughed and you're collecting unemployment, and that unemployment is a third of what you may have made on a monthly basis, or is it if you are collecting unemployment, that doesn't count as a source of income?
Correct.
Okay.
Yes.
So as the economy opens back up, and hopefully, let's just look at Vegas locally, demand picks up, occupancy picks up, then they start bringing more people back in to work in the hotel industry, just as an example, then that could affect real estate demand, because now those people will be able to show proof of income. And even though they wanted to buy it 3 months ago or a month ago, now they've got the income to kind of show it.
That is correct. So most people maybe had to have that pause April, May-ish, are going to pick back up in June, July.
That's great.
Yeah.
It's something to look forward to on the horizon. And what I saw is it could be a problem, at least from a financial standpoint, unless Congress extends those unemployment additional benefits and the economy doesn't open up like what we were hoping it would. That could be a wrench in not just the real estate market just in general. But what can home buyers and sellers, because that's an equally important part of the equation, what can they expect if they can qualify, if they're ready to sell their home or they're ready to buy a home? What can they expect as far as the experience to be like for the rest of 2020? And how has that experience changed for you?
So the one thing that has changed, we have more disclosures. So, of course, anytime there's a risk of a lawsuit and there's a risk of, differences in contracts, you have to have extra disclosure. So we have coronavirus disclosures, changing in occupancy and showing. So we cannot show homes that are occupied by tenants, and that should be changing here soon. And we can't have open houses. So those were the biggest changes. If it's
to keep everybody safe.
Yeah, if it's owner occupied, it's up to the owner. And if it's vacant, of course, you can show it. So those were the biggest changes. And then the disclosure allows for the seller and or the buyer to back out of the deal if need be.
Regardless.
Yes, because of the situation. Yes, because of
Interesting.
financing. But other than that, things have pretty much been the same. Sellers still have nice homes, still have multiple offers within the first week, and they're gone within the first week.
That's great.
Yeah.
And did you see? So I mean, to that point, if you're doing those because you have those restrictions, where typically in the real estate market you have the open house. I mean, I've seen $1 million listings a couple times, so I know generally how it works. But I'm an extreme novice. So you have the open houses, and that brings in the potential brokers and buyers. But that, to your point, not being able to do those things hasn't really drastically affected the buyers on that buyer-seller equation. Just the unemployment and the lack of being able to show income has really been
Just
that big
the proof
hurdle.
Of income, yes.
Yeah, that's I didn't even think about that. So, in the state of the real estate market, kind of where we're at now, since 2008, 2009, or 2010 would be, I guess, probably the low. What changes have there been made to help circumvent kind of what happened in 2008 from a lending standpoint? I know when I qualified for my mortgage, I had to basically give up my first unborn child. So what, other than that, what kind of significant changes have put in place to kind of shell up the system of not only the lending, but the real estate market in general?
So one of the big downfalls for, that 2000 to 08 decade of lending was all you needed was an ink pen.
Yeah.
And a social security number. And now, I mean, they want verification of assets, and it's a lot more stringent. Depending on your FICO, depends on your ability to gain that loan and how much you can receive in lending. It's just a lot more stringent in the type of lending, and they're just not as quick to give you money just for having an income.
And case in point, no income, no proof of income, no loan. Just now, from that standpoint, you could have, assets.
But even now, since all of this, they've increased the DTI, so your debt to income requirements.
Really?
Yeah. So
talk about that.
So that instantly occurred. So as soon as they realized that, okay, we're hitting a recession, that we have some changes that need to be implemented to avoid a housing crisis, they instantly implemented housing lending changes.
Sure. And specifically to, the overall market, now versus then, I always get clients or even prospects that come in, and they always feel that we're going to see another major housing collapse. And I try to educate them a little bit about, the differences of the financial crisis and COVID. And I'm not trying to downplay, the pandemic or anything, but it's a little bit more like a natural disaster where it kind of wipes things out. We have to rebuild, but the underlying economy is still there. Versus '08, you had a true liquidity crisis in the banking system, piled on top of that of bad lending and everything they did from a complex financial product standpoint. Can you talk to, just kind of the differences of '08 and what we're going through now?
So,
and do we expect a big 50 or 60% crash in real estate? I'm not asking you to make a prediction.
No, yeah. I can predict that. Absolutely not. I mean, unless something catastrophic happened that we don't have occurring right now. Mm-hmm. But as of right now, we will not see that 50%, off of a home. So
if you're interested, keep looking, right?
Yes.
And at least.
And I mean, if you see a decline, I mean, it is naturally cyclical to have, that 3 to 5% change in a market. Sure. But the double-digit market change in a year, I mean, we're not really looking at that right now. Our market has stabilized a little bit to where we're on that single-digit increase and decrease.
Yeah, and that's interesting because we're so hyperly sensitive to large groups of people here gathering, right? Meaning any kind of tourism or leisure stocks are clearly, taking a hit now. And it's nice to hear that the system has the solvency to hold on to it, whereas '08, people just couldn't afford the payments. Right. I mean, they couldn't afford the payments on the different types of mortgages, which I'll get into in just a second. But significant differences between then and now, and like I've said, it was almost a once in a generation type of event what happened in '08 versus the similarities of COVID. Just because we happened to have a recession, it's just so fresh in their mind. Where neither of us were alive during the Great Depression, but maybe one of our grandparents was just on the cusp of it, and then they saw the '08 crisis. So that's interesting. So I'm going to kind of divert just a little bit to more of a little bit on the lending side, because I know a lot of our clients now with rates so low. So just as an example, my jumbo loan is at a 475, and just out of laziness, I haven't refinanced anything. But I know there's a 30-year fixed rate mortgage, which is kind of like the pedestal of mortgages. Then there's different ARMs, adjustable rate mortgages, whether it's a 10-1 or a 7-1. And then there's interest only, fixed and variable, I think, because we kind of discussed a little bit of that before. Can we go through, especially, if I don't know, I know one person personally that has lived in their house for 30 years, and that's my grandparents. I know a number of clients that have lived in their house and stayed there their entire life and paid off their mortgage before retirement, all the things that you should be checking off. But it seems to me that the younger generation isn't so inclined to set their feet in concrete. Can we talk about the pros and cons of the different types of mortgages that are available and how you address it with clients, whether they're baby boomers getting a house, moving from California and relocating to save money, or if they're a younger generation like you and I, maybe just wetting their beak in their first house and not sure if they're going to be there for an extended period of time?
Yeah, so I do have to disclose I am not a lender.
Yeah. Yes.
But, with my experience, I can say, in my opinion, mm-hmm. I personally do not recommend adjustable loans. Mm-hmm. Almost never.
And is it because you just can't control the unforeseen, right?
Exactly. I mean, you can't control a pandemic happening tomorrow, right. Unfortunately. Interest only, in my opinion, are good options if it's an investment. Mm-hmm. Personally, for an owner-occupied home, even if you only plan on staying there 5 years, I personally don't recommend interest-only loans. Interest-only loans. Because interest-only loans still require you to refinance at a certain point.
Sure.
And you can't guarantee that.
Right.
So anything you can't guarantee if you're living in that home, I personally don't recommend.
Because you're taking that risk.
It's
right?
always a risk.
It may be 3% now, and 7 years from now, whatever that period of time, maybe 8.
It's always a risk.
And now you're stuck in the home, or you can't sell it, or the year before we go through an '08 crisis, and now you can't sell your home for what you owe.
Or you can't refinance it for that 20% equity that you need for that refinancing.
Sure. Very smart. So that 30 year is always the safest.
Or the 15-year.
Okay. If
Or
you want to get it,
15-year.
if you want to get it done quicker.
Yeah. But interest only, I recommend typically on investment properties.
Sure.
Yeah.
Okay.
Because you don't want to hold, you don't want all your assets to be held up in your investments.
Yeah, in the investments. And maybe on the investment, you have a little bit more finite time frame of when you want to own it. Okay. Very interesting. So we kind of talked about where the market is locally here, and at least for you, you've seen a relatively solid pace of buyers and sellers, even compared to January, despite the pandemic, and despite everything that's going on. Specifically, the amount of people that are tied to tourism and travel here locally, which is positive. So hopefully, as we start to open up a little bit more, maybe get some positive signs in the medical space, maybe companies will be bringing more people back. Where do you see prices kind of going? And again, I'm not locking you in on a prediction, but just your best educated guess, giving if the economy just remains normal essentially for the rest of this year. Where do you see them next year? Where do you see the market?
I don't see any major increases.
Yeah.
I personally, within the next 6 months, don't see any major decreases. Mm-hmm. If this pandemic has a long-term effect on people's employment, that's where we'll see the effects. If a person cannot stay in their home, 1 year out, 2 years out, that's where we may see some effects. And it's not going to be major effects because we've kind of circumvented that with unemployment benefits and stimulus and all type of resources for people to avoid being in those situations this round.
That's positive.
Yeah.
Yeah. So let's hope that we can get to a point in the economy where that bridge that the government supplied to individuals and businesses is long enough to get us there. Now, if I was interested in selling my home, what advice would you give to somebody that is thinking of selling their home in today's environment? What not only advice, but kind of precautions, CYAs for you as a professional, of expectations of selling in this market if someone's interested? And I guess that depends on the type of house you have.
Well,
and all
it also
those
depends
things.
on the person. So we have some older clients that are a little bit more precautious. Mm-hmm. If you're concerned with the virus, you may want to do virtual tours.
And how are those, by the way?
So they do work. It's not ultimately optimal. I mean, most clients that are going to be owner-occupied, they do want to see the property. Mm-hmm. Properties that are tenant-occupied are sitting on the market a little longer right now. Tenants aren't leaving, and they're not showing the home.
Yeah.
So
would that be like rental properties?
Correct.
Yeah. So those are a little bit more difficult to sell because...
Right now.
Yeah.
Yeah.
Because the tenant's not going anywhere.
Not only is the tenant not going anywhere, they're not showing the home.
Yeah.
Yeah. I mean, and that's a statewide law. So, that should be lifted here soon. But for right now, the last few months, we've had that to where they're no-show.
So from the real estate numbers that are coming in here, at least locally, the large majority of them are owner-occupied sales and
or
purchases?
vacant.
Or vacant. Okay.
Yeah.
Because of that.
I mean, here and there we get some tenants that will show.
Okay.
Here and there you get an owner that has some type of agreement.
Sure.
It's very few far and in between.
Sure. So what other piece of advice? So other than setting expectations, is there a typical time frame on selling a home now?
Really almost nothing has changed in that aspect. I mean, a home that is in good condition literally is gone in less than a week.
That's great.
Yeah.
And encouraging for people. And I still think that you're going to continue to see, what was unfortunate about this, at least here in the local market, is we spent the last 2 or 3 years really kind of diversifying the economy away from the Strip. where we were looking at pro NHL teams and then a pro NFL team. On top of the fact that we have no state income tax, and a lot of people in California are in that retirement age and they want to get away. So maybe Arizona or maybe Nevada, possibly Utah, I guess, because it's close as well.
Let's not forget our very low property taxes.
Yeah, low property taxes as well. So we had this kind of perfect buildup, and then, Corona had to come in and put a wrench in it. But I think that, if anything, Las Vegas did live through the Spanish flu pandemic, and we've lived through multiple different situations where we've actually come through bigger and better because we've learned from what we've done before. So what's optimistic though is because what I see is housing in general is a significant amount of someone's net worth. And to see the relatively liquid nature right now, at least in today's snapshot, of being able to move that if you have to, continues to bring optimism of anybody who would want to move into the city to take advantage of the tax rates and the new things that are coming here as a vibrant part of the western part of the United States.
Our weather's still better than the East.
I agree. And born and raised here, it's you put up with 2.5, 3 months of blistering heat. You just don't go on as many hikes or things like that.
That's what the AC is for.
Yeah, that's what the AC is for, exactly. Well, would you like to add anything else? Anything to kind of look out for, or anything that your credentials as far as how people can get a hold of you, or if they want to list their home, how can they get a hold of you?
Yes, so anyone interested in buying or selling, please give me a call, 702-460-3632. And I'm happy to hear from you, and let's discuss this further.
Love that. Well, thank you for joining us today. I really do appreciate you taking the time.
It was nice speaking with you.
And for everybody out there, we're going to sign off. Thanks for listening. And remember, if it don't make dollars, it don't make sense. Thanks.